Wagwan, welcome back to my YouTube channel. My name is Dreycosting. If it's the first time over here, what we do over here is to analyze the financial market, like chop it up in pieces, so each and everyone can understand. Today, we're gonna look at the Zoom third quarter earnings, right? But before we jump into it, quick disclaimer. All right, Zoom. Everyone should know what Zoom is by now, right? Since Corona, Zoom has taken over the place, right? A lot of work from home, a lot of meetings, everything is really being done through Zoom. A lot of corporate people have went further to use like Teams for higher security purpose and so on. However, Zoom has been doing really great since Corona because the demand for Zoom, right, increase the revenue as well as increase the stock price. So let's break down what's going on in the third quarter earnings. So right out of the gate, you realize when compared to the prior year third quarter, right, revenue has increased by 367%. Wow. Sheesh. Like, oh my God. I Zoom. Oh, the people over by Zoom right now, trust me, man. It's like Christmas every day for them over there right now. I wish I was the CEO of Zoom right now. I'm being honest, man. All right. So let's go down. All right. So everything has just been looking good for Zoom. We're gonna go straight into. Let's start with the balance sheet first, right? So watch me now. So right here, see where cash and cash equivalent has increased from the prior year, right, to this right here, right? So it's not looking too bad. It's not looking too bad. So that increased from 283 to 730, and these are in thousands, right? So this is 730 million, right? So that's a huge increase. Just like every other financial statement I've analyzed so far, right, through Corona, a lot of companies, they're not like day traders. They're holding their cash and cash equivalent and not doing a lot of investing because the stock market is not ready to move 100% as yet. But as soon as the stock market start to move, a lot of companies is going to free up their cash and start to invest it, right? So moving on, there are some securities here, so that's not too bad, right? Not a large movement in investment, so that's not too bad, right? One thing I'm confused about with Zoom though, this is just confusing. So I need to do a little bit more research in it, right? Why are their liabilities increasing, right? Their liabilities is increasing. I don't know why they should increase their liability when they really have far more revenue, far more cash. But I guess probably they are moving on the conservative side, right? Because they're on a wave right now with the Corona. So my assumption would be that they're probably moving on the conservative side to see where will the company be when Corona has really boiled down. All right. So probably after that, probably they'll like move their cash a bit. So right now, what they're doing right now is to balance their working capital, right? They're balancing the current assets versus the current liability, and that's a good sign. So if you look at the current ratio, what they're trying to do is to balance it out in order to stay afloat and not use up too much cash. So that's a wise decision by the board, right? Right here, they have some operating lease, right, on the balance sheet. So back in the days, we used to just write off the leases straight in the expense. However, the new standards as came in, right? So what we're doing right now is to keep the lease on the balance sheet and not to write it off in the expense, right? So therefore, as you pay on the lease, you pay on the liability and not just writing off each period within the expense. So we make an overall entry of the lease term within the balance sheet, and we pay on the lease just like how you'd pay on a loan, all right? So that's what's happening here. So I'm saying that the fact that they're growing, they need to start investing in their own building, right? And not just paying leases. So that's something that they need to improve on, but it's a sharp turnaround for them. So I guess they're gonna deal with that in the near future. But it's still a positive sign. Let's look at the common stock. The underlying investors in terms of the stocks has also increased That's a good sign. You know, by now you guys know that I like to look at the common stock to see what the underlying investors are doing. Those that actually purchase and buy the underlying stock, right? And it has increased, so that's a good sign. And look at this. Retained earnings in the prior year was this 152, and look where retained earning is right now. Oh my God. Zoom is really doing it's just obvious, right? It's just obvious, right? So let's go down to the income statement. So I'm not going to look at the 3 months comparison, right? So by now you guys know that I like to look at the year-to-date comparison. So I'm going to look at the 9-month year-to-date comparison compared to 2019 compared to 2020. So right away, I spoke about this at the top, right? So you see where revenue was here, 434. It's at 1.7 right here. Whew. Zoom has been really doing good. It's just self-explanatory, right? So let's look right here. So I know that the sales would have increased, right? But I wanted to see what they were doing with their expenses. So what I'm seeing right here, look at this, research and development. This is a key expense to what Zoom is doing. The fact that it increased dramatically from the prior year, that show that they have recognized the demand for the Zoom product. And what they're doing is to try to improve the Zoom product, right? Consistently, right? Continuous improvement on the Zoom product, and not just sitting down, right? And being all contented where they are right now. So that's a good sign by the board, and I think it's a very good move by them, and I have to really give them a thumbs up for that, right? Sales and marketing, right? They're pushing out the product that has increased as well. All right, so that's not too bad. And but the overall net income has increased. So though they are spending some more money right here on this research and development and the sales and marketing, right? They still know to manage these expenses in order to come into a good net income when compared to the prior year, and that's a very good sign by Zoom, right? So they didn't just jump up and spend out all of the money that they earn, right? So as I said, that they're being very careful, they're saving their money because they don't know if this is just a wave, right, from the whole corona thing. They don't know if the Zoom product would be really strong within the next 3, 4, 7, 8 years, right? So it's a really wise decision by the board just to play it smart, right? So I really have to give them a thumbs up for that as well. In the cash flow statement, right here, I see some investment in property, plant, and equipment, and this is a good sign, right? We speak about this all the time, that whenever you invest in the property, plant, and equipment, right, you invest to get return on those investments as cash inflows within the future. So it's a good sign right here. So I would have to look down in the notes, analyze this a little further in a later video to see if they're actually trying to invest in their own building and not paying lease going forward. So it's not a bad look. It's not a bad look, right? So finally, on the cash flow is this, right? This is the proceed from their stock option. So people are buying more stocks, right? So people are buying more stock. They're believing in the Zoom product, right? The demand for Zoom is really high, and I'm really impressed. One drawback though, right? I am not seeing where Zoom has been paying out any dividends according to their earnings report. I've not seen where they're paying out any dividends on within their cash flow statement, and that is something that they need to look to do as well. The fact that their stock is in this high demand, right? They need to give back to the shareholders, right? So that's a drawback. So let's look at the charts to see what's up. Okay, Zoom chart. If you guys have been following all my financial statement breakdown, right? You know that when Corona hit at the start of 2020, going from January to March, right? Everyone stock price did this, right? However, Zoom stock price did this, right? So from the whole work from home, social distancing, and so on, Zoom stock price did the opposite of what every other stock price did in the market, right? So this was the key support where Zoom was coming from. So Zoom was coming from all the way from $46, $47 thereabouts, right? So within March, it made a shift, right, from this low right here, created a higher low right here in August, right? When it created that low, we're on the daily chart, right? When it created this low right here, it then shifted again, and it's here in November to create a higher low. So this is the previous low, and it created a higher low. So if you notice, This line right here, this line that I have right here is the previous low. Price did not break this previous low. So the fact that price did not break this previous low, right? We're still in an uptrend. That's the definition of an uptrend, right? Higher highs and higher lows. So we see where, watch me now. We see where Zoom, right, hit somewhere about, what's that high? 591, right? Shifted, took a rest, right? Shifted and created a higher low. Zoom is definitely going for that 600 mark. So the fact that we're here right now, right? All right, so this is the predictions, stop loss there about right below this low right here, right? Right below the high low, right? And we're going to go all the way just a little bit below the 600 mark, right? So why stop loss right here? It's simple, right? If price retrace and break this low, right? Then we're no longer in an uptrend, right? So let me show you what I'm talking about, right? So price needs to make something like this, shift and retest, create a higher low, and still continue up in an uptrend, right? So I'm saying it's already shifting, right? So if it shift and break this low, then we're no longer in an uptrend. It has void the definition for an uptrend, right? So that's why we're putting the stop loss right here. Hope you guys got some value from this. If there's any earnings report or any stocks or companies whatsoever you want me to look at and to assess the financial statements or the charts, just comment below and I'll try my best to assist you. All right, enjoy the rest of your week and big up to everyone.